Hi everyone, welcome to another honeystocks.com stock market outlook video, and this is going to be going out on the 6th of August 2022, but I just want to take the opportunity to thank everybody. I have been incredibly active on social media over the last month as a little bit of a test, and many of you have reached out thanking me for a lot of the charts and a lot of the data that I've been presenting. I know that it's helped many of you enormously, and long may it continue. I think this week I am going to be addressing a lot of the charts. I think one of the biggest questions that I get asked, especially at the moment, is really something along the lines of, Sam, how long is this bear market rally going to last? Is it a bear market rally? Is it a market bottom? But there are some very key levels in the market that I think we are fast approaching, and I think it would be negligent if we did not pay attention to these levels. So I have some of those charts, and of course I have some individual stocks for ideas for the forthcoming couple of weeks. Couple of things just to get out there is, one, I'm not a day trader. My work is primarily geared towards a mid-term approach. I'm not looking for little 10 cent, 20 cent moves in the market. I'm a trend follower. I'm looking for $20, $50, $200 moves in the market. Obviously, stock dependent. But the point is, I'm really weeks to months in my outlook. I'm not slinging weekly options and that kind of stuff, or looking for little moving average crossovers on minute time frames. I think it's a lot of nonsense. So let's dive into some charts. Let's see what the data is telling us and see if we can try and make some sense of kind of what's going on. Now, as always, before I get into the charts, please pause the video. Make sure you're comfortable with this. It basically just says there's not any investment advice. Do all your own due diligence and don't be silly. Just to give myself a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm very widely known for in the professional game. Last week I covered these charts. This is the performance of those charts that I put out to social media. Few of my recent calls, as you all know, I don't use the magical hindsight indicator that you will see across social media. Back on the 23rd of June, I made a big call that we were about to see a rally in the market in my weekly letter. Back when the whole crash started back in November, I highlighted the danger with the small caps breaking down. Right at the start of the year, I made a big call that we were about to see a big correction, a big valuation reset on the 3rd of January. And then, of course, on the 5th of January, we had the same failed breakout in the S&P 500 that we've seen in the small caps. And if you want to go a little bit further back, again, front and center on my website is how I predicted the crash of 2020. The real-time analysis provided to our clients and members 1 week before the crash enabled everyone to get defensive. And if you get value from this, as always, like and subscribe. It would be much appreciated. But I think I probably want to just start off by just spending 5 minutes walking through the broader market and some of the data that I think is incredibly important. I have touched on this chart numerous times over the last couple of months. We know that the US dollar index has been a massive headwind for stocks over the last 6 months. With the inverse correlation with the S&P 500, it doesn't take rocket science to understand that if the dollar index is going up, then stocks have been going down. So the question I have at the moment is, are we starting to see a decoupling of this relationship? And what we can see is the S&P 500 has been putting in a bit of a rally over the last month, and that has coincided with the US dollar index taking a little bit of a back seat. Now, there's many macro guys, lots of economists are looking at things like sentiment data. We can look dating back to 1980 The consumer sentiment data has never been worse. We already know that the yield curve has already inverted. And what that is essentially saying is, when we can look to the past history, we know that when the yield curve inverts and drops below zero, these grey shaded out areas are periods of US recession. So we already know that the yield curve is inverted, it's getting worse. The big question is, are we currently in a recession, and what will that recession look like? We know that consumer credit spending is hitting fresh all-time highs, and then we can see that the personal savings rate is in free fall. So we know that the economy and I guess the attached data is pretty bad at the moment. But one thing I want to draw everybody's attention to, if you didn't already know, is that the stock market typically bottoms 4 to 6 months before the economy does. So yes, whilst a lot of the macro guys and the economists are pointing out a lot of the key data that I think is obviously relevant, the stock market is forward looking, and it's already started to price in a lot of this information. And I'm making the case that if the US dollar index is going to start to break below these levels, that might be an environment where you might want to start layering in risk on stocks. Certainly over the last 6 weeks, stocks have been a great place to be. I don't see the point in a lot of analysts out there that are making bearish calls and scalping 2-3% short positions. That just doesn't make sense when stocks have been absolutely ripping 40-50%. Seasonality, August is pretty decent so far. This is the S&P going back over the last 70 years, and August is off to a half decent start. The S&P 500 over the course of the last week is now pushing up against what I deem to be a very, very key level. We already know that over the last 6 weeks I have made some big calls. Now, the advanced decline ratio had a massive spike back at the bottom of the COVID crash, which indicated a market bottom. We did get a little bit of a false signal there back in February, but over the course of the last 6 weeks, 2 months, we have had a couple of spikes again in the advanced decline ratio, coupled with some big key levels in the market. So if we can get a move above these Fibonacci levels, which are a big part of my work, then that would again lend itself to the idea that the market is putting in a tradable bottom. I think at the moment, everything I think you have to treat as guilty and proven until proven innocent. But certainly the risk to reward propositions were there for everybody to see. I'm very, very open about my work. These are not charts that I am just presenting this weekend. I have been putting these charts out for the last couple of months, and these levels in the market have absolutely held firm at the moment. The triple Qs, we've got the Dow again holding on to these key technical levels. We've got the small caps again threatening to put in another move higher. So all in all, the way that I'm really looking at the market at the moment, and certainly communicating to our clients and members, is, look, there are stocks here that are absolutely bottoming. I've been very, very open about a lot of these charts. I mean, you could look at Shopify putting in a potential base bottom. Again, I made a bullish call on Shopify when it was at the lower end of the range. It met our upside objective. But I think when you look at the data set as a whole, there is definitely a case to be made for taking nibbles on stocks. It doesn't mean that you have to go, fully allocated, by any means. But I think it does make sense from a risk to reward proposition to look at a lot of these stocks that have been beaten down. I've said it over the last few weeks. If you are in the environment of investing, and you are not looking at stocks, and certainly a lot of these blue chip names, a lot of the beaten down great stocks that have been beaten down 70, 80, 90%, if you're not looking to buy a lot of these stocks, then what are we even doing? So this has really been my mentality over the last 6 weeks. It has played out wonderfully well. I hope everybody has done very, very well on a lot of the calls that I've made. We can see that the ARC ETF, which again, this is from our members sector ETF chart book, it met our upside objective, 40% upside, and it now does look like it's potentially threatening to break out. When we add in stocks like American Express, again, we've got reasonable PE ratios, we've got earnings growth, they're breaking out of these base bottoms, and I'm not overcomplicating it. If I would much rather pay a slightly higher price for a stock breaking out of a base bottom than buying blindly on the way down. And certainly I think with American Express, it looks like it's breaking out. This is one that was covered in our recent members halftime analysis. I made another big bottom call when everybody was losing their minds on Freeport McMoran, purely based on RSI to expect an oversold bounce. That's exactly what we've got. It rallied 28%, it's pulled back, but pullbacks when we are making bottom calls offer opportunity. So I would hope to see the trailing stop loss now on Freeport McMoran. If there is follow through in this move next week, I'd hope to see our stop loss start to advance higher. Microsoft, again, holding on to some big key levels. I've been covering this chart for a couple of months now. I think you can continue to be bullish on Microsoft provided it's above these levels. Back on the 5th of July, I made another bottom call on Avis Budget Group. They did post earnings, and I like what I see. I think there's a massive risk to reward proposition in place. Yes, I understand it has already moved a significant level, but there is a very easy out, in my opinion. If Avis Budget Group decides to break lower from these levels, then you can get out. But for me, these are the types of charts, these are the types of companies that I think make a lot of sense. I'm not advocating buying a lot of the beaten down Chinese tech and all that nonsense. I'm looking for good, solid, quality companies. I think with Nvidia, I think with the Senate now passing the semiconductor bill, I think it's maybe advanced to the second stage, or maybe it's been signed off this week. I forget what the latest update is, but I think with something like Nvidia, we know with Nancy Pelosi and all the nonsense that comes with that, it is one of those names that, again, looks like it's putting in a potential base. I do anticipate a little bit of a battleground here at the $200 to $210 level, but I think if you don't have exposure to Nvidia, then certainly a breakout above that level might make a lot of sense. I've been absolutely humbled by the number of messages that I've received on this call. I've been posting the chart for INMD to Twitter over the last few weeks, and it's up 62.5%. Congratulations to absolutely everybody. I think what I would say is that the RSI is now at a level where you would reasonably expect some kind of short-term pullback. So if you are in the game of trading, then this might be an environment where active profit taking is sensible. Of course, I don't tell anybody how to manage their capital. It's entirely up to you. But it's had a massive gain, and I think it's quite reasonable to expect some kind of short-term pullback. The trailing stop loss has advanced to $32. So do with that information what you will. Apple, again, over the last couple of weeks, is posting new relative all-time highs versus the S&P 500. It has rebounded from the levels that I've been highlighting over the last few weeks. It's doing incredibly well. I think next stop is certainly 182, which would be obviously all-time highs, and we'll see how that one develops. If you picked up my analysis video that I posted to YouTube on June the 20th. Again, I get asked for a lot of updates on these charts. I think with Amazon, I made a bullish call at $100. It's obviously moved 47%. I think if you are holding Amazon, I think especially if you're trading Amazon, investing, completely different game. But if you are trading Amazon, then I think this 147 level makes a lot of sense to pay attention to. PayPal, again, broken out above its 50-day simple moving average. I have highlighted this previously. It has broke out. The trailing stop loss now is up at 86. We've got earnings out the way. Things look pretty decent, but we'll see how price reacts now. Of course, 73.48 was the bullish call, and we're up at 95 now. So anybody that has taken that position has done very, very well. So congratulations. Earnings out the way with Crocs. I again made a bullish call on this one on a breakout. We've had earnings out the way. It is no coincidence to me whatsoever that price has rebounded from this trailing stop loss level. I use very, very specific parameters for this. This is not a coincidence. So price has rebounded on the back of positive earnings, and today the stock has went on a rocket ship. Again, we're looking at low PE ratios and solid earnings growth. Sonos, again, rebounded spectacularly from, I think, very logical support levels. I try not to overcomplicate things. I think with technical analysis, I'm sure there's many of you that are watching that have learned all the nonsense about, moving average crossovers on 15-minute charts and all that nonsense. I try to keep things simple. I'm looking for risk to reward propositions on good companies, and certainly something like Sonos made sense a couple of weeks ago. Again, another one, Arista Networks. We've had earnings out the way, very, very similar actually to INMD, where I think it's quite reasonable to expect some kind of short-term pullback. This was a recommendation in our halftime 10 days ago, and it's of course done very, very well. But I think it's now getting to a point now where you can reasonably expect some kind of pullback. Very, very similar to Chipotle. It's put in massive rebound. I think this level here around 1640 makes a lot of sense. I think if there's a breakout above that level, then that could offer opportunity. If you let me just show this a little bit clearer. I forgot to add this one in. So yeah, I think if you are looking to trade Chipotle, this is certainly a level that I would want to be aware of. Tesla, my thesis hasn't changed on Tesla. I think all we've seen in the last 24 hours is just a healthy pullback. We've reached an overbought condition. Again, base bottoms, not overcomplicating it. It's one of those names as well that, if you are advocating being short Tesla, knowing what it's done in the past to a lot of shorts, you're probably asking for it at this point. I don't see the point in taking the chance and going short on something like Tesla. The path of least resistance is always to the upside. Yes, it will pull back with the broader market, etc. I get it. But, if the market is going to put in some kind of recovery, I don't think I would want to be short Tesla. Gold. In my weekly letter this week, I did make a bullish call on gold. Simply, it's not because, gold is going to rip 40-50% in a couple of weeks like a lot of the stocks have recently, but it's one of those areas of the market that you can look to maybe the gold miners and individual names. So if gold is going to catch a bid, you could take a position in the gold ETF, or you could maybe start to look at some of the miners. But either way, I don't overcomplicate it. It's low end of the range, very easy risk to reward proposition, 22.5% upside. It's one of those that will take weeks to months to play out. But if you are looking to escape from massively volatile areas of the market like biotechs and growth tech, etc. There's no harm in looking at these names to maybe balance things out a little bit. But what I would say is, if you are still here, please hit the like button. It tells me that you're getting a lot of value from my work for sticking around so long. So it really does help creators like myself. Just hit the like, let me know in the comments what stocks are on your radar as well. It would be much appreciated. And we also have Penn Gaming. We've had earnings come out this week. I had one of my two of my members reach out to me this week asking for a chart on it, and I found it quite interesting. I think this is looking like a trend line to pay attention to. We have historical support and resistance levels, so I think if this breaks out above this level, then I think Penn National Gaming could be one of those that really gets moving. I think certainly I'm obviously based in the UK. I think this is Dave Portnoy's gaming company. He's got some link with them anyway. Not entirely certain, but yeah, I think if it breaks out, then that could be potentially a name to look at. So if you've had value from that, please do hit like and subscribe as mentioned before. If you have just stumbled across my work for the very first time and you're wondering who I am, what it is I do, please do jump on to our website at honeystocks.com. We provide charting research to retail and professional clients. We have very specific memberships, and we provide our premium weekend analysis every single weekend to our clients and members. We provide our premium charts, or best stock ideas, our investment ideas. We provide a midweek halftime report, provide access to a wonderful trading community, full access to my chart books. And if you are somebody that's maybe new to the markets and maybe technical analysis and relationships in the market, etc., I'm told that I've built out an incredibly good technical analysis program, which is included with all memberships. But I am very, very unique in what I do. On our website, I publish all of our high conviction ideas that have ever gone out to our clients and members over the last 4 years. These are what our high conviction ideas look like, very specific instructions. The commodity index has been very, very kind. It was a short position recently when the market was obviously in free fall. Zillow, Box, again, some really good ones. This is what bullish charts look like. Cloudflare last year was an absolute, it was incredible. Antero Resources still is up at $40-50. But feel free to go on to our website, check out the full list of the ideas. I publish the dates, the companies, the prices that were recommended, and how those stocks have then gone on to perform. I do not recommend things like penny stocks or stocks that anybody is paying me to recommend. There are always solid companies, good companies, and of course you need to do all your own due diligence, but feel free to go and scrutinize that, check it out. But we are probably a good fit for anyone who has a mid-term approach. I did say at the start that day trading, all that nonsense, that's not what it is I do. So if you've got a mid-term approach, maybe you are maybe just too busy with work, family to hunt around and find the best stocks like us professionals do. Maybe you want to just be part of a community, and there's a lot that we offer. So feel free to please go and check out our website. But if you have stuck around to the end, thank you very much for watching, and hopefully welcome you soon. Thanks as always.